there's a problem that I see emerging, and I don't even know if it's emerging. It's probably something that's been going on for years before I ever got involved in this. And that's where the insurance company will undercut a plan of care that has been laid out for somebody and signed off by that person's physician. And basically the way it works is when an individual needs care, in order to access policy benefits, they have to be assessed by a medical professional. And that entails having somebody physically go to the home, take a look at the way the home is laid out, and then observe the individual functioning within the home. And then they will assess what kind of needs they have. If they have difficulty walking and bathing and dressing or any of those things, a plan of care will be created as a result of that on-site evaluation, and the plan of care will lay out what the professional believes is medically necessary for the individual, and then the individual's physician will look at it and either sign off on it or modify it to some extent, and then the care commences, and then the invoicing goes to the insurance company, and then the insurance company gets a hold of it and says, no, we don't believe the person needs 8 hours of care a day, we're only going to approve 4. So right away you've got a conflict between the insurer and the insured person, where the insured person clearly has documented the need for 8 hours of care, and you have an insurance company that is obligated to pay for it, saying we're not going to pay for 8, we're going to pay for 4. I see that as probably the biggest problem in the industry, because that's the problem that's on the ground. It's a palpable problem. If somebody needs 8 hours of care and they're only getting 4, something's going to happen in those 4 hours that somebody's not there with them, and things do happen. People fall down. The elderly people, they fall down. And generally, elderly people who have problems with walking and balance and so forth, if they fall down, they can't get up on their own. They're stuck on the ground, or on the floor. And not only that, when they fall, they get hurt. They break hips and things like that. So it's a very serious problem. And it's the one thing that I focus on very intensely, because the idea of somebody being denied care that their doctors say they need because of money is something that is abhorrent and should not happen. So that's one of the problems. Another problem that I think is significant is a lot of times as people age and they do start to lose some of their mental faculties, they may forget to pay their premium and their policy lapses. Well, there's a law in the state of Florida that recognizes that as people age, things do happen like that. So the law says that if a person lapsed their policy for non-payment because of some condition giving rise to the need for care, that policy can be reinstated. And I've had many people reinstated who just got confused and didn't pay their premium or something happened. And that's huge, because once people reach that level, they become uninsurable. So if they lose the policy, then they're going to have to be paying for this care on their own, and the costs of care are enormous. And for most people, they can't afford it. So that's another component. Another issue involves having most of the policies that have been issued have a feature in them called a restoration of benefits, which is a feature that is very, very important, because essentially that provision in the policy can make the policy a perpetual policy. In other words, people buy a policy, Some people buy lifetime policies, so restoration's not an issue. That policy will go on for life. But the majority of the people don't have lifetime policies. They have policies with certain time limits, 2 years, 3 years, 5 years, whatever the case is. With a restoration clause, somebody can be on claim for 3 years, reach the end of the claim period, and then restore back to their original benefits if they do certain things that the policy requires them to do, essentially to go without care for 180 consecutive days. That policy will restore, and they'll get another full period of benefits. And a lot of people don't know that. And I've seen the insurers just simply not apply it, or refuse to apply it, or make an issue out of applying it, and people accept that, and they think that their policy is over, when in fact it's not. So that's a very big issue. Another issue that I see a lot is when the insurance company just simply it's called a short, they call it short pay in the industry. And that just simply means that the home health agency or registry provides $100 worth of care. They send the invoice to the insurance company. The insurance company sends $80. And for no good reason other than they can do it. And for years and years they've gotten away with it because the providers just don't have the wherewithal to pursue the balances. And then more often than not, the registries and the agencies are looking to the insured person, the person who needs the care, to cover the difference. And that's pressure, because now these insured people have to find the money to cover the difference. So we've collected well in excess of $1 million of accounts that were short paid, and that alleviated not only the pressure from the provider being short paid, but also the pressure of the provider looking to the insured person to pay the difference. So that is a benefit that we've been able to get for people.